Good morning, I'm Sally Barker. Welcome to Local Business Focus. With me this morning is Wayne Hitchens from iBamcy Consulting. Good morning, Wayne.
Morning, Sally. How are you?
Good, thank you. Now, this morning we're talking business value maximisation. Can you give us a little bit of a background on what this means?
If we look at the Australian landscape, particularly in small to medium enterprises, it would be true to say that the majority of business owners' wealth is tied up in their small business. Many people are also invested in the share market, the property market, but small business owners have the cash that's generated for the family, for the income, generally comes from the family business. And so when we talk about business value maximization, it's really the process of making certain that we can increase the value in that business for the final exit.
Now, you mentioned three different areas there, small business, stock market and property. Do you separate all of those and have separate focuses for those?
Yes, absolutely. Obviously, it depends entirely on what a client's risk profile is or what their investment strategy is. But today, talking about small business enterprises, we focus specifically on the value of the business. So let's take a business, for example, that does $1 million turnover, and let's assume that after all expenses are paid, they have an earnings before interest and tax of, say, around $300,000, which would be a fairly profitable business. The value of that business would be a multiple of that figure. So take $300,000 as what we call EBIT, or earnings before interest and tax. A purchaser would then multiply that figure times 3 or 4 or whatever they're prepared to pay for the business. And that would determine the value of the business. So in the case of a business that's valued at 4 times EBIT, it would have a value of $1.2 million.
Now, for people who haven't heard that term before, EBIT, can you just explain a little bit more about that?
So it's actually really simple. And the way we try to educate our clients in regards to that is, imagine you working for a boss and you earn $100 and it costs you $70 to run your family. So you pay for your rent, your lights, your water, your food, your teenagers' food, your entertainment, all of those sorts of things, and you're left with $30 at the end of the month. Then that would be what you're left over with. So when it comes to EBIT in a business, earnings before interest and tax, it's money coming in, all the money going out, our expenses, our wages, our GST payments, and all of those sorts of things that get taken off our earnings, which leave us with earnings before interest and tax. And then we pay interest if we need to, and we pay, obviously, tax to the government.
So this is like the next step from understanding cash flow.
It's very, very important. In fact, cash flow is probably one of the most important things in the business. It's one of the struggles that many small business owners actually have, is planning for cash flow. I'd just like to go back to what I said earlier on. GST payments, I just want to correct myself. GST payments don't really have anything to do with our day-to-day expenses. But many small business owners will forget that they're actually tax agents on behalf of the government. So the money comes in as they invoice their clients, and they have to provide for those GST payments, which is obviously separate to all the other expenses in a business. So we really try and help business owners to look after their cash flow and make sure that they've got the ratios right. So in other words, if you've got a business, going back again to the example of using just $100 as income, we want to make certain that all of the different expenses in the business are in the right ratio to the income levels, because that will affect the final figure. So money in, all expenses, money out, what we're left with.
Do you think some small business owners don't understand when they're going into small business that is a big requirement?
If I were to be fairly direct on that answer, the answer is absolutely yes. Many small business owners go into business for a variety of reasons. A lot of them are forced into that position. Maybe they're retrenched. They get a package from work and they say, well, I've got to derive an income for my family. And so they have an idea and they go into business. But the planning is very often just not there. It's not that they don't have the nous, the intelligence to do it. They're just so busy doing other things. They're marketing, they HR, they're doing all kinds of other things, operational things, selling, running the business, talking to staff, talking to suppliers, fixing problems. Doing all those sorts of things as a small business owner very often doesn't leave them enough time to concentrate on the numbers. There's an old expression in business, business is about numbers, and the numbers need to talk to you. And that's where we come in. So that when the business owners finally exit the business, and we've worked out that the value of the business is what it should be, they then derive maximum value for the sale of their business.
Okay, I really like that. Business is about numbers and the numbers need to talk to you. I really like that. That's fabulous. So how important is it for small business owners to concentrate on business value maximisation? Is it something that you need to be on top of all the time?
I don't think it's something that you need to be on top of all the time, every day in business. I think it's more about having a framework where it's being addressed. So yes, it's a very, very important part of business. Very often we see business owners get to a point where they just close up shop. They haven't done enough work on maximizing the value of the business. They don't think that there's value in the business. And so it's really important to have that framework and process, not something that you'd want to concentrate on every single sort of waking or working hour of each day, but absolutely have a framework and a process that you know is going to derive the maximum value for the business.
And I guess if you are feeling somewhat lost, there are consultants you can call upon, and this is their business, I guess, and they can come and help you out. Exactly.
And generally what our recommendation is to work with a board of trusted advisors. So probably your accountant, a business consultant who really understands numbers and understands the operational issues facing small business owners, somebody that's done a lot of the things that need to be done in a small business. But absolutely to have an advisor, to have a person that you can talk to. I almost liken it to the old days of a GP. When I was a kid, the GP, the family doctor, would come to our home if we were sick. Sometimes you just needed somebody to talk to. Unfortunately, the world has changed very much. It's become far more commercially driven. But in the financial world, very often business owners just need somebody to talk to. So almost a financial GP, if you would, to help them contain all of those elements that make up their business.
So mentorship, mastermind communities, those kinds of things, are they helpful?
Absolutely. We run a number of workshops, and I've been to a number of workshops myself. And I actually engage a business consultant myself for my own business, although that's something that I do for clients. I have somebody that I bounce my ideas off, because very often you're so busy running your business, the old expression, you're working in it, not on it. But mastermind groups, peer groups, similar businesses, similar age groups, fantastic idea. Very, very good. And we would recommend that 100%.
Wonderful. Thank you so much for joining us this morning on Local Business Focus.
Thank you, Sally.